Today we're going to be talking about the daily cycle structure in the forex markets. Without any further ado, let's get right into it. I'm going to be picking this pair, AUDJPY. So the daily cycle structure in the forex market is something which happens almost every single day, like literally every day it happens, every single day of the week. So it happens on Mondays, Tuesdays, Wednesdays, Thursdays, Fridays. Literally almost every day, if not every day. So today I'm going to be teaching you how it happens, why it happens, and when it happens. So let's get right into it. I'm going to be using this indicator, the session breaks indicator. It's just an indicator which breaks the sessions, like which separates like each and every single day of the forex trading markets. So it separates Monday, Tuesday, literally something like this. So this is Monday, where this deep green color is. So this is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. So today is a Monday again. I'm just quickly gonna pull up that, and I'm just gonna delete every all the drawings so that you can see how I do it from scratch. So yeah, this is how it looks. I'm just gonna put this off right now so you can see the charts clearly. So we're gonna be starting on the daily time frame. Yes, so this is the daily time frame. So on the daily time frame, we can see that we're very bullish. This is the inception point of the bullish trend. High, 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 low. 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 Lower high, lower low. But you can see that this lower low over here is still not lower than this. So until this lower low gets after this lower low, until there's a new lower high, something like this, and then continues, that's where the trend changes. So as we can see over here, right after that break off, that little break of structure over there, over here, so the next high was a high, so which maintained the trend, the bullish trend. So now that we're on the day time frame, we know that it's a bullish trend, isn't it? We're gonna drop down to the 4-hour time frame. On the 4-hour time frame, this is where we're gonna be drawing our trend lines. So we can see that it is very bullish on the 4-hour here. This is the inception. My bad. Yeah. We can see that's the inception point over there. I'm just gonna draw the trend line from here. And all you simply need to do is clone it so that it captures it very nicely. So we can see that we're in a bullish trend in it. So now we're gonna drop down to the 1-hour time frame. over here we're going to turn on the sessions indicator. And one thing I forgot to mention is, if you don't want to use this indicator, you can use this instead. You just need to go to your settings, and over here there's a built-in session breaks. I'm not going to call it an indicator, but yeah, we can call it an indicator too. So all you need to do is click on that, and it literally does the same thing as the indicator. But the reason why I use that indicator is because it enables me to it allows me to change the color of Monday, so I know where Monday is, Sunday is Monday, Sunday, Monday, and I know where all the other days is. Because if I know where Monday is, I can literally see all the other days just by looking at Monday. You get what I mean? So this is the reason why I don't use this. But if you don't want to use that indicator, you can use this. This is very vital actually to this trading strategy. So all I'm going to be doing is I'm going to be turning off this. Yeah. Over here. And I'm just going to go by that one. I can see that this is Monday with that color over there. Tuesday, Wednesday, Thursday, Friday. So on the 1 hour time frame, we can see much clearer. And the daily cycle structure is something which happens every single day, literally every single day, bro. On most of the forex trading pairs. It happens on the indices as well. Something like NAS, US 30, SPX, yeah, UK 100. But today's video, I'm just going to be talking about the currency pairs. So from now, we drop to the 15 minutes time frame. And after that, and there's something I need to touch on as well. On the 15 minutes time frame, that's where you actually see all the stuff. That's where you see everything clearly. That's where everything happens on the 15 minutes time frame. So keep that in mind. So we are going to be starting over here this week. Yeah, this previous week. So this is a Monday. So what happens is, what we do first is we mark up the Asian highs, the Asian session, the high of the Asian session. Okay, let me just touch on this. So there are there's the Asian session, the London session, and then the New York session. So these are the three major sessions we're going to be focusing on. Asian session, that includes the Sydney and the Tokyo, and the London session, that is a London session, and then the New York session. So the most volatile sessions are the London session and the New York session. So what we're going to be doing is every single day. So this is a Monday. Mind me, on Mondays the markets are mostly slow on Mondays, but this Monday it wasn't slow. So it's not going to happen on every Monday, because on Mondays the markets are literally very slow, you get me? But it happens on some of the Mondays too. So I'm just gonna show you how we do this. So on the first thing we do is we're gonna mark out the London Open, which is at 8. Mind me, that's London time, because I'm in London, and the London session opens at 8 a.m. So the Asian session, we're going to be marking out the highs, which is over here. So that's the high of the Asian session, and then the low is right here of the Asian session. So right after that, what happens is After marking out this, we're gonna wait for the break of the Asian session high over here. And in New York session, we're gonna be looking for reversal patterns like the M, something like this. You get me? Or something like this. You get me? Or if it's a sell, if it's a buy, sorry. So this is for sells, the M's, those are the reversal patterns. And for buys, we're gonna be looking for W's, literally the opposite. Something like this. Or something like this. So I'm gonna explain it much into detail when we get in depth with the video. So on this Monday, clearly in the New York session, we didn't have any reversal patterns. So it broke to the upside of the Asian session, and then it continued, made a low, and continued going all the way. It didn't make any reversal pattern. So all you have to be doing is you have to wait for it to make this first leg and then makes the second leg. So literally what we would have been looking for was this over here. So this would have been the first leg. We would have been waiting for something like this to take the buy, to take a sell, lower. You get me, to catch this whole move. So this would have been the move we would have caught over here. You get me? Aim for Asian lows. You get me? Yeah. So let's move further. So on this Monday, there would have been no trades. And on this Tuesday, all we do is we mark out the London Open. London Open is right here at 8 o'clock, 8 a.m. And then the next step is we mark our Asian highs. So literally the wick over here is the high of the Asian session. And then the low of the Asian session was over here. So all we have to do is wait for a break of the Asian high, which happened over here, if you look closely. And the New York session starts at 12 noon. Where is it? 12, yeah. Starts over here. I'm just gonna, for the sake of the video, I'm just gonna make this a different color. Yellow. Nice color. So the New York session open is the yellow, and London Open is the blue. So we're gonna wait for the break. So all the way from here, from London Open all the way until New York Open, we didn't actually have a break. So what you have to do is you have to wait for a break, and you have to let a candle close above the Asian range, the Asian session high. So over here we got that clearly, and you can see that the first leg was over here, this. So this was the second leg. So right after the close of this candle, this high probability bearish engulfing candle, you have taken a sell right there, over here, targeted Asian lows, with your stop loss above, over there. So tell me, this would have been a straight winner. And also you could look at it like this, in a micro sense, like this. You could look at the first leg like this. As you can tell, I already explained this. We look for these type of reversal patterns. Even if you missed this entry, you could have entered here, because this is this right here, these two bearish candles are high probability bearish candles, because like it's a bearish variation candle. And I'm gonna make a separate video on that actually, and I'm gonna send it to you guys. Don't worry, I have your email address. So those two candles are bearish variation candles, which are very strong bearish candles as well. Strong entry candles. Those are high probability entry candles. So if you had missed the first one, the first entry right here, you could have gotten your second chance right here as well. So literally your entry would have been here. Stop loss right above that candle, that big wick, and targeting Asian lows. Simple as that. And mind me, you're not gonna win all the time. You know, every trading strategy has is losing times. So sometimes you enter a trade and you literally just get worked out. That's just it, like you just get worked out. It's not like you're wrong, but probably you place your stop loss wrong or something like that. You get worked out, or sometimes news happens and you know the crazy wicks come and takes you out and then move in your direction. So we could see that on this day. That was a Tuesday. We caught the trade nicely, nice and clean, with a 10.4 pip stop loss. So we move on to the next day. That was a Wednesday. So the first thing we do is we mark out our London open 8 o'clock, yeah, over there. And I'm just gonna change the color to blue so you can differentiate between London and New York. So after that, I could mark 12 o'clock as well over here. Yellow, yeah. So after that, all you need to do is you mark out your Asian highs right here, Asian lows as well right there, and all you need to do is wait. So for buys, we're waiting for the break to the upside of the Asian high, like this place for buys. So actually the first trade we called was a sell. So I'm just gonna make this a different color so you can differentiate. So these green horizontal rays, the top one is the high of the previous day Asian session high, and the bottom one is the low of the Asian session for the previous day, for Tuesday. So I just want to differentiate because I don't want you to get confused, because I have the red one here and the red one there, which is for Wednesday. So this red horizontal ray is the high of the Asian session for Wednesday, and then this one over here is the low of the Asian session for Wednesday. So what we're gonna be doing is, I'm just gonna get rid of this one so you don't get confused. So we're gonna wait for a break either above or below the Asian session. So the Asian session's high is over there, the Asian session low is right here. So clearly on this day, London opened, we got a very nice break to the downside of the Asian session. And tell me what, New York session came. Look what happened. We got the reversal pattern right there over here. Look. So this is the first leg. Second leg. Look at that. Nice and clean. So this is what happened. I just want to pull it aside so you can see. So this is what we got. Something like this. See? Something like that. Let's place it so you can see nicely. You see it? Nice and clean. So what we do is, on this day, we are looking for buys. Anytime it breaks above the Asian range, you're gonna be looking for sells. Any day it breaks below the Asian range, you're gonna be looking for buys. So today, Wednesday, we're gonna be looking for buys. And after this candle closed, this candle right here, that would have been the first confirmation, medium probability, given that I haven't closed above the wick of this candle. But if you had waited for the second one, if you had like a little more patience, you waited for the second 15 minutes candle to close, you can clearly see these wicks as well, these nice rejections. And after the close of this candle, you can see this big rejection, and then the candle closing in the upper third of the wick. The candle closed in the upper third of the entire candle, signifying that there are more buyers and sellers in it. Yeah, so the bulls are strong and the sellers are weak. So since we have all these confirmations, we hop on the trade. We put our stop loss right below that wick, and then we aim for the Asian high. Patience. So today, on this day, our take profit wouldn't have been hit until the next day. So all you have to do is just sit on your hands and then watch your profit run, bro. Isn't that beautiful? So all you have to do is in order to manage your trades, so if it goes halfway to your profit, you can set alerts over here. So basically what I usually do is I put this 1 second. What I usually do is I just draw a little trend line over here halfway, and then I put an alert on it so that if the alert comes on, if the price hits and close above it, I just move my stops to break even. You get me? All I have to do is move my stop to break even when it hits halfway my profit, so that it's going to be a risk-free trade. You get me? So all I need to do is just sit on my hands and let the profit run. So that's just a little something I wanted to touch on as well. So over here, on the next day, all we need to do is rinse and repeat. We mark out London Open. London Open, and after marking out London Open, we mark out the New York Open as well, and we draw we draw out